Hello, everybody. It's Saturday afternoon, August 7th. Welcome to the latest edition of the Plus3 Stock and Commodity Forecast Show. My name is Ben Maldonado. I'm here with Barry Hederachi. Hey, Barry.
Hey, Ben. How's it going?
Good. How are you?
Doing pretty well. It was a slow week last week, so had a chance
Sure
to rest
was.
a bit.
Yeah, in the ES, it sure was. And we'll go over that.
Mhm.
But in the world of Bitcoin, it looks like we're out of triangle hell.
Mhm.
Let's jump right in and start on Bitcoin. So Bitcoin has been caught in this. First, we had a regular triangle. Then we had an expanding triangle that had a hit last week that was capturing it, as well as the full square. During the week, we had a pullback to the quarter square here. You can see the purple dotted lines, the second one, price held there. That was a signal that the market was strong when we got that reversal. And we've pushed up and we're actually above the square for the first time since May. So Bitcoin looks bullish. Price is stopping at the 1/8 square right now, which is to be expected. So maybe we get a little backing and filling here. So if we sit on top of this, it looks like it's up and away again in Bitcoin. What do you see?
Yeah, it could be up in a way, but I feel like the next quarter level is probably the real test here.
Mm-hmm.
And I don't know what level you have there. What is that?
The quarter square is right around 46, 270, 46,
Mhm.
270.
Okay. So yeah, we can say it's out of the all that churning, but
Triangle hell.
triangle is a good way to put it. And you have a good sharp trend line going up, coming off the July low.
Sure.
Yeah, it looks okay. I'm not completely. I want to see the action around that quarter square up, see how that goes for the longer term. For now, yeah, it looks strong, no question. I think holding that lower quarter was a good show, and we'll see how it goes from here.
We'll see how it plays out.
Mm-hmm.
Well, let's jump right into the big
But I
five.
tell you, for the future though, that quarter square point is going to be critical on any pullbacks later.
Right.
So.
Well, let's jump into the big five with you and see what the markets have in store for us this week. I see the dollar. There's the E-mini.
Okay, there you go. The E-mini. Let's see where we are. I can't remember if we started with that chart last week or this one.
I think you started with this one.
This one?
The daily, yeah.
Hey, what do you think of the labels this week?
Nice.
Are they okay?
Yep. And if people can't see them now, they need to go see their optometrist quickly.
I mean, they're big enough, right?
Yeah.
Yeah. Okay.
Looks good.
Good. And how about the placement? The middle's okay?
Good.
Yeah. All right. Good. So, well, okay. We added a couple of levels last week. Let's take a look at those. That was 44.37 and 43.40. So we had a little bracket there, and we were expecting the market to trade within, getting weaker below the lower bracket and stronger above the upper bracket. And as it turned out, we basically got to the upper level, the 44.37 area, towards the close of Friday. So the question is, where does that leave us? Based on the daily, let me just get the square back to where. Based on this placement, we were looking at this 270 degrees up being resistance. And then we talked about how the market's going to be in a stronger position above that. And we did get above it and consolidate it. So this is all very positive and strong price action, as far as I'm concerned, especially above the square. And my key level, this 44.37, is there for a reason. It's really to see, it's really that level that we want to take out. If we can really take that out clearly, then I think, we're ready for like 45.50 or 4,500, 45.50. Up until then, even along this line, it's a little bit, you have to be a little bit cautious. And the reason I say that is not just because of this cycle of 360 bars out coming out of last March. I'm saying it because we also have the weekly that we've been watching, and we have this 72-week square that we've been watching, and we're crawling right up to the target, which would have to, which is the 144-degree level, and the price is up here. I hope you guys can see it. Can you guys see that?
Yeah, I was looking at my my monthly this morning, and 144 up on the monthly from that March low last year is 44.78. So right there.
So this is 44.88. So it's right in that range.
Sure.
These can't be put exactly to the tick, but it's just a good way to take a look at where we are. Now, being that we're crawled up this 2x1 perfectly, and we're coming up into this 72-week in time and 144 in price in this case, I would say it's the time to be a little bit cautious, and you really have to. There are times to sort of take the foot off the gas a little bit, and this would be one of those times. And just to cover for people that might not have followed us for that long, we use these squares, and we look at the half squares and full square levels as targets and support areas and launching pads for the next leg. So, coming off this 50% line down at 3,900, the next target would have been up in 144, which would have been, which is 44.80, 83, 85, that in that range. And now that we're getting close, I think it's time to sort of know that, it's like driving up and you see a stop sign ahead. So, you slow down a bit. So this is the time to slow down a bit and look around. And what this is going to bring us, we'll have to see, but it's the time we have to slow down a bit just to see if there's any kind of changes in the mood of the market. And as far as mood of the market goes, for next week, I would say if we can hold above 44.37, market's in a good, strong position. We're probably going to test, 44.50 with no problem, and even go on to 4,500. So I would say the level to watch is 44.37. It's critical that we hold it. Now, if we can't hold it, it's possible that we, further consolidate between this 43. Let's just say 4,300 and 44. Let me see the number here. Take a look at it. Let's say 43.70 to 44.37. That would be the range to consolidate. And I would think that's not very bullish if we do that, considering that we have that, weekly square lining up. That's if we can't get above 44.37. Okay, that's the key level. If we can get above that, fine. Weekly can come later. We probably have more to go. That's fine. But 44.37 being the critical level to watch for a balance. So strong above that and softer below it. Okay. Now, real weakness is not going to show up until we take out, let's say, 43.50 or so, 43.70, 43.50. So that's not a problem. Just watch those levels below, and above is 44.37. Did I mumble that up, or were you able to get something out of that?
No, we got it. We got it. The interesting thing too is, in addition to the timing we have from the geometry, there's also major cycle hits coming this weekend and next week. So it's all the other reasons. And on the daily, some other work that you and I do, Barry, we've got major divergences at these highs that just make sense to, as you said, slow down, take a look around, and make sure everything's clear.
Exactly. And now we know the couple of levels to watch to see how that price action works out. All right, let's move on to bonds. We were bullish last week. We were talking about breaking the triangle and testing this level up here at 65, about 166. And bonds did that last week. We went up there. And, we always talk about being able to get to a level and hold above or not. And bonds were not able to hold above. It basically tested it, really tried, and sold off. And we broke the trend line that was a couple of months old. My take is that, well, let's take a look at the weekly. Let's go to the weekly really quick. Use that as a good reference. So in the weekly, last week, we talked about bonds being strong, and the next really level to take out would be the quarter of the square, which is really around 66.25, and to price to be able to hold above that. And it's really clear to see, for 3-4 weeks, we tried to bump up against it. We tried to get above it. We couldn't. And the fact that we couldn't, it looks like we're just going to consolidate a bit or correct a bit. And we're well above the lower trend line on a weekly basis. So it's firm, but it's not in that impulse mode. And looks like it's going to take a breather. The key level to see if bonds are really done with an upside impulse would be 62. And that's the half square here on the daily. And that turns out to be 162. So long as we're above that, we're probably going to consolidate, run around a little bit, and get ready for the next leg. In case we take out 65, then we're looking at the full square, so around 170 at some point. So here it looks like the bonds are going to consolidate a bit and spend a little time.
Yeah, I'm gonna jump in with bonds when you flip it back to me. That's one of the hot charts I wanted to highlight. So,
okay, great. So moving on to crude. We've been bullish above the 66.83 level. Let's just say 66.75. And and we had the daily trend line we've been watching for a couple of 3 months. So last week, crude sold off, but we're holding right above this box that we've had for a few weeks, maybe a few months. So we're right at the support level, critical support. The 66.83 is sort of our line, at least my line, for the balance of the bulls and bears. So as long as it's above that, it's on firm grounds, but we're really scraping pretty close to it. And so we'll see what happens. Again, we were running up into 79 area, corrected, second try, lower high. And that's typically not great bull market price action. We should have gone up and tapped it on the second run. We didn't. So that brought in this weakness. And now it's probably going to consolidate a bit. And if it's really in a good position, strong position, it's going to do it above the 66.75, this area. And it might even be, 65, right up this red line where the last low was. Anything above that is bullish. And if we get back under it, I think then there's probably more correcting or sideways chop coming up. So at the moment, it's not in a strong impulse mode, but it's in a corrective mode with support right under it. Looking at the weekly crude chart, and this is something we look at every week, how the how strong the market's been climbing right up the one by one. and it too has this 72 by 72 square coming up. So it's possible we consolidate a bit and we try to reach up again, tap the square before this is all said and done, which is around 79. Okay. It's possible we don't get to it. Squares that don't always mean that we have to. But I'm a little suspicious since the high that we made is exactly at the range high in 2018. And it's unlikely that we really don't penetrate that and try to at least do a false break. So I'm guessing there's still juice left in it. We have to just let it finish up its correction and get ready for the next leg. Do you have anything to add to crude there, Ben?
Just that crude is acting like, and I'll touch on it when I do my review. Most of the commodity markets I look at are acting similar to crude in that they've come off the highs, they're chopping around, they got some weakness, and it looks like there's one more push lower coming.
Right. So there we go. And crude is no exception, right? Let's move on to gold. This is where we left off last week. And again, we had a couple of levels that we had on the chart. On the upper boundary was 1832, lower was 1789. And the talk was basically, unless gold gets above 1832, we're still going to be in a consolidated corrective mode. And last week we tried to get up there and couldn't quite do it. And we sold off and went through the 1789 to the downside. Of course, it broke the fork, broke any kind of a trend line we had here. And now really the support is the old low, it's around 1750. Let's see if we get there. And I know, Ben, you're going to talk about gold a little bit deeper.
Yep.
A little bit more short term. So here, 1750 is really the support we're looking for. Else, we might really go and try to clear this box and put in some new lows. But for now, it looks like 1750 is a level that we're looking at for support if things are halfway normal. And because right in there, it could be a little lower because that half of the 45 degrees down would be 1739, 1739. So 1730, let's say 1740 to 1750 is really the key support level for on a daily basis. And, we could do a false break here and that would just work just fine. But for now, like what we talked about last week, it's really in a corrective mode, not much to do on the longer term. Going back to the weekly on gold.
Still in the triangle.
Still in the triangle. Hey, Ben, these bars are a little bit darker. Can you see that?
That's good. Yeah, it's good.
Okay, this is too thin, right? Too light?
Too light. Yeah, too light.
Okay, all right. So on the weekly gold, we were talking about hopefully holding into this range, that little box that we drew in, and we are pushing the lower boundaries of that. And that's what I was saying. If we take out the 1750 lows, certainly we can go back and check the old lows around the 1670 area. So that's quite a bit of a drop, something to watch closely. And that would set up an ABCD down. And there's a 5-point pattern forming here also.
Sure.
And not to forget this trend line. So this might get activated if we go any lower. So there's some support, but it's not after 1750, 1740 to 50, the next support area is really down in the 1680 area. All right. That's all I got for gold. Moving on to the dollar. Just can't keep it down, Ben. Look at that.
Yeah.
And so our story, if you've been following, we've been bullish to the dollar, and this 91.40, the blue line we have there was the key to establishing the firmer footing on the bullish side. And we're expecting this correction to hold above that and above the quarter square line, which is the dotted red line here, which it did last week. And now we're back up. And if we can hold above this 92.60, which is the upper dotted blue line, I think we're going to be in good, very in a good position and really strong position to go up and test 93, 94 area in the dollar.
Sure.
All right. That's the next target.
Mm-hmm.
And so everything looks good there. Looking at a weekly gold. Again, I'm not going to move the squares around too much, so you guys are familiar with, and it's easier to follow week over week. Again, the weekly is fine. The lows came in at the half square around 89, came back and we tested it, held it just fine. Now we're back. Our take is that it's going to go back and test the full square. And on the weekly basis, it's around 93. So let's see how that works. So far, weekly looks okay. It's in good shape.
Mm-hmm.
Nothing much to add to that. And
and interestingly enough, the strong dollar fits with the, one more push down in these commodities that I'm seeing.
Yeah. Well, there you go.
Mm-hmm.
And drawing a new line. Yeah. That's it for the dollar and the euro, since we look at the euro dollar every week. Okay, so last week we talked about the euro being weak, and we were expecting it to hold at the half square around 1916, which it did, and it sold off promptly, coming back to test the lows like we were expecting. And looking at the dollar now, it looks like it's possible that we go and take out these lows and maybe perhaps even these lows that we set back in April.
Where's your full square on that, Barry, at the bottom?
Full square down is around 1570, 1568.
So if we take out those previous lows from July, that's the target.
1560, yeah, that would set up a nice line there. I should actually drop a line there just for reference.
Mm-hmm.
There we go. Now we have that line. And that would really be a good false break. Yeah, you look at this, right? I mean, we did a false break here before we took off. And if we come down and clear that up, that would just be perfect. So, all right, that's it for the euro on a daily chart. Let's take a look at the weekly. Weekly, not much to talk about, really, from last week, if you guys are following. We've been waiting for a test of this center line, and looks like we're almost there. And the key being, if we take that out, then we have a lot lower to go, and those targets that we talked about on the weekly, on the daily, could be reached without much of a problem. And a half square on the weekly would be down in 1400. So let's not get too far ahead of ourselves.
Right.
For now, we're just looking for continued weakness in the euro and possibly a test of this half square if the center line gets taken out. But since we are getting into the support area, be a little cautious until we get through this or not. So I would watch this. I would watch the price action around the old low, which was around 1700. Okay, 1700 down here.
Excellent.
Anything to add?
No, it looks good.
You're good?
Yeah.
Okay. All right. I think that's it for me. Let me put it back to you and cover the rest. All right, Ben, what do we have here?
Got the NQs. Gotta get where the action has been. So let's take a look at the NQs. Last week we were talking about how we were right up against resistance, and we got to watch and see if we can get through. And what did we do during the week? Banged up against it, poked our head up, closed just under it. So right now, this full square is acting as really, really strong resistance. And for whatever reason, this 15150 area is holding price ferociously. Now we got to see, do we get through it this week and go up and can settle on top and then maybe get up to the half square here? Or as you can see, this is a hand-drawn line, but it's essentially a 1-by-1. And we've been rising off of the May low on this 1-by-1, and we're getting squeezed now between the full square and the 1-by-1. So something's got to give at some point this week. It looks like we're going to have a decision here. So as long as we hold this area, we got to think that it's going to be weaker. If we hold the 1-by-1 and can punch through this full square, looks like we'll be up and out to the next spot.
Mm-hmm.
Anything to add on the NQs? I know you look at some of the components like Apple and Microsoft and Amazon.
Well, just on the chart that you have here, I was going to say how the S&P got to our target, that 4437 area, and it stalled. And you have the NQ hitting the key level above, and it stalled for a couple of weeks now, or at least a couple of days. So we'll see how that goes. But it's the time to watch those levels now that we're at a main square.
It's time to pay attention for sure.
Yeah. Mm-hmm.
Let's go to the 30-year bond, because this looks like a potential really good developing trade. Barry reviewed the 30-year and showed how we broke that steep trend line that we were following and how it failed at resistance. Well, here's a different look at it. And the reason why I think it really bears watching is we have a defined level where if we lose it, it's going to be weak, and we're also going to bust the trend line, and that's right here.
Mm-hmm.
And the level is in the 163.17 area. If we lose that, not only do we lose the square, not only do we lose this trend line that supported prices from the late May, early June lows, we're going to basically have a lower high and then a lower low, which could just do a small little ABC and stick around here, or it could accelerate to the downside.
Yeah.
So you got the setup. We don't know how it's going to turn out, but if you take all of these types of setups, you're going to have a high priority or a high percentage of them be extremely successful and catch fast moves. So I'm watching the 30-year for that reason, is that we are looking at a situation where we may have a fast move coming if we can violate that support at 163.17. Anything else on bonds? I know you covered it, but anything after seeing this chart?
No, I think that's a great level to watch. I think it's a key level to watch and see how we turn out off of that, because the levels on that chart, the levels have been rock solid. So you have to pay attention to those.
Yep.
Look at the highs, right? Perfectly. Two tries and failed.
Right. And so, and this is the setup we look for, right? We look for a pullback, a lower high, and then breaking that previous low is the chance to catch that third wave fast move. So this is the setup we look like. One looks like it's potentially coming this week in the 30-year Treasury. So watch the bonds and watch that level. Here's another one we've been talking about for the last few weeks that looks pretty good, and it's wheat. Before I get into wheat, though, the one thing I touched on when Barry was talking, of the 11 different commodity markets that I watch, 7 of them are in the late stages of corrections and consolidations. In markets like soybeans, corn, gold and silver, which I'll show, copper, crude oil, coffee, they're all very bullish, but they're correcting, and they're near the end of a correction. So I'm not going to highlight those charts because there's nothing to do this week, but we want to watch them and we want to stay aware and look, because, and Barry and I have talked about this before, one of the things these markets do is they set up for a clean out type of move where they come in, undercut a low or get above a previous high, take out all the stops, get everybody wrong footed, and then they turn. We don't know whether or not that's going to happen in 1, 2, 7 out of 7 of these markets. None of them, all of them. We don't know, but we know that the setup is there, and we're late in these corrections and consolidations. So those markets that I mentioned, well, I'm not going to highlight this week because there's nothing actionable. They're on the radar, and we're watching for those clean out lows. Wheat, on the other hand, is setting up to be, it's nowhere near this low, unlike soybeans and corn. It's up more closer to the recent highs. So I'm looking for some sort of pullback or ABC in wheat that would complete, somewhere around 695, 700, potentially coming all the way down to this line here. But you can see, even if we pull back to this line, we got a lot of distance between there and the previous low. So wheat is really strong, and when these commodities turn, the grain specifically, whichever one is the strongest throughout the correction is generally going to be the strongest when the bull starts again. So I think wheat is carrying the mantle right now. So I'm watching wheat, see if it's going to hold this trend line or break, see if it's going to hold this half square or break, and if so, where does this next low come in? Because that's the spot we want to buy and get in on the next move higher. What are your thoughts on wheat, Barry?
Well, I think you covered it. I'm bullish long term, so it's just a matter of picking and choosing your entry points. I think you're right. This might be a good level here, and not much to add other than
Sure.
My basic rule is, look, if it's moving, not much to do there. You just trade the side.
That's right, and it's bullish for sure. And we're looking for places, support areas, or good areas for a turn for when this group turns. Which, given where the other charts are in their
what's your half square price and the full square above?
Yeah, the half square here is around 709, 708. And the full square is around 750, 749, 750.
I think the next drive should be 750 and get above, and then consolidate above. That'll set up the next phase, I think.
Right.
So see how that goes.
The next two charts I want to show you, it's gold and silver. These are ones that are a lot like all the ones I mentioned. They're still correcting. They're not done yet. Because they had the big price action on Friday, I wanted to show some potential pads that we're looking at here. So gold has been correcting since last August. So for almost a year now, it's been correcting since it made that high. What we're doing on this leg, to me, looks like what could potentially be the final leg in the correction, an ABCD down. Like, we couldn't get above this full square, tried it multiple times, even sat on top of it for a few days. But then we crossed under it with a vengeance on Friday. So a simple ABC down comes down and takes out these previous lows, the March lows. How bared up would everybody get if that happens? And how bullish long term, meaning like on the monthlies and the weeklies, are gold? Very bullish. I mean, we're confident we are in a bull market in gold. So be aware that this is the kind of clean out last phase sort of the correction that I'm looking for in most of these commodities. But you want to keep an eye on levels where you can buy it, where you've got good support and a good risk reward ratio, and that looks to be the case.
And what's that half square on gold?
The half square here is around 1720.
All right, and the full square above was?
The full square above was 1812.
All right, thanks.
Yeah. And so watch gold. Now let's look at the next one, which is silver. Silver's had the similar correction since August, but if you notice, it's much flatter. Gold was a sharp price correction. This is more of a correction in time. been going relatively sideways since last August. Same thing. If we do an ABCD pattern here, we'll get near these previous lows. So I wouldn't be surprised if they take them out just to, spook everybody. And that would be, this half square here is down around 2150.
And the full square above?
The full square is around 2328.
All right.
So we got to watch these levels, see where support comes in. But I'm fully expecting more weakness in silver, with the idea that maybe it's a clean out low, and maybe they only do a clean out low with the March low here and come to the full square. But you got to keep in mind that an ABC takes us down here, and if we're down here, why wouldn't they just sweep all these stops here? So as far as silver goes, I think that gives you a decent view of what a lot of these commodities are looking like. Let's go to Nat Gas. This has been our favorite for last month or so. Continues to look and act very bullishly as we, make a high, pull back on support, make another high, pull back on support. We got stuck last week on this half square, which is around the 420 area. But gas looks good. I think it's consolidating in a bullish manner and looks like we're going to have one more push higher. The full square here is around, 450. Yeah, around the 450 area. So I think that's a reasonable target for the next push higher. And if things really get going, obviously we would.
And what's the lower full square?
The lower full square is around 390.
Okay.
So you got support there. We're at resistance at 20. It's acting bullishly, consolidating in a bullish manner, sort of resting for the next move higher on gas. Couple others that look pretty good on the commodity space that aren't sort of pulling back and correcting, but actually are making progress. Sugar's one. Sugar's been doing a series of ABCs where, ABCDs, where it's ABCD down, ABCD up. So I think the next pullback in sugar, if we can get it to this 1826 area, it looks like a really good buy in this level because we're not only just pulling back to the half square, we're sitting on top of previous highs, from the last two pushes up. So I like sugar. I think buy it on pullbacks. The full square target, is up over 1928. And then I think if we get up there, we're going to get through there and head on up to the next square. So sugar is in a bullish position. If we see some weakness and sympathy with a strong dollar, look to buy on support on sugar. And the last one I want to cover is cotton. We've been watching this one for a few weeks. Pointed it out when we were in the triangle. We broke out of the triangle. I've been making good progress higher. Again, just like sugar, I think you buy on any pullbacks. I'm looking in the 88 area. If we can get back to 88, which would be the half square here in the trend line, it'd be a hell of a spot to buy if we get a pullback to that area. But cotton is looking.
Otherwise, what's your upside target there? First full square?
First full square is in the 93.60 area. Yeah, 93.5. And then after that, you're up to 99 and 100 area. So cotton looks good. You can see we've been in this triangle since March, and it's starting to lift out of it. So any weakness, it's into these support areas. It's a good buy. So in summary, on the commodities, most of the commodity markets are still in consolidation and corrections, either from last August highs or the early 2021 highs. We're in the late stages of those corrections. Watch them closely because Barry and I were talking about this before we got on the air. Through other work we're doing, the long-term bull markets in these commodities are being confirmed. They're looking back, in 40, 50-year histories on these things. Every time these sort of things happen, they give a longer-term secular type bull market move. And while people may say, oh, the move is over and these things are done and there is no inflation, that's not what our longer-term charts and our longer-term work is telling us. These things have have a ways to go, and they're about to start another leg up once they finish, this next move down wherever it needs to go. That's it for me, Barry. Anything else to add before we sign off?
I think I have nothing else to add. I think you covered the action pretty well. Yeah, no, not much. I think we can close up the session.
Yeah, with the cycles we have, and with where each of these different markets are in their own cycles, things are about to happen. Changes are about to come. So just be ready. You're forewarned. Your levels. Watch them and take advantage of them when the price turns in an area of support or resistance. And otherwise, we'll see you next week.
All right. Have a good week. Thanks, Ben.
All right. Thanks, Barry.